Welcome to Copperfield Weekly, a financial topical show where we discuss raging financial issues around the country. This morning I have with me investment banker Mr. Kissinger Ndubisi. Welcome.
Thank you very much.
Glad to have you. And we have also Mr. Joseph Agbeyindo, a consultant economist.
Thank you.
You're welcome. So we'll go straight into it. Mr. Kissinger.
Yes.
Many companies on the Nigerian Stock Exchange have been trading at 2010 to 2011 prices. So given that most stock exchanges have rallied from huge losses in between February and March, do you think we might see an increase in the prices across the board on NSE?
Definitely, I do believe that there will be increase in prices since the stock markets really reached its bottom low around that February-March period.
Okay.
And presently, yes, the prices have started moving up. There's been some rally between end of February and March, and also now into April. There has been increases in prices because over the last week, the Nigerian Stock Exchange recorded daily positive stock index prices all through the week. So there has been increases.
Okay, awesome. So even if we don't see any major recovery in the stock prices in Nigeria, are these current prices good enough for investors, considering the dividends from some of these companies?
Oh, absolutely, absolutely. Because any good investor is looking at either capital appreciation or dividend income.
Okay.
And if he is investing in if he's investing in a company that is priced at low and he gets good yield on it, it's an absolute investment dream for him. Give an example now. If we look at GTB, and GTB paid a dividend of 250 kobo a share.
Okay.
I mean, if the low price when they paid the dividend and the low price, it was low priced at about 20 naira or so. So that's a dividend yield of more than 10%.
Okay.
However, if at the times when the GTB was priced at maybe 30 naira or 35 naira, and they were still paid the same dividend of 250 kobo on that would have been a much lower dividend yield. So give or take, this is an investor's delight to get prices of companies at good prices and get good dividend yield on them.
Awesome. Yes. Awesome. So we're going to talk about treasury bills now. Between 2017 and 2019, many Nigerians invested in treasury bills. Now the interest returns on these bills have dropped below 5%.
Okay.
Do you think it's possible for this trend to continue, or is this just the perfect time for stocks to grow?
Okay, well, looking at that question, let's look at it on two angles. First and foremost, the treasury bills being low priced as it is could be a function of what the government's policy wants to be.
Okay.
Because the lowering of interest rates in the general money market could be a government policy of allowing more people to borrow money from financial institutions and also remove returns from only financial markets to real markets. However, being that the treasury bills are at a very, very low price now, this is the absolute best time to go into the stock market, where if you invest at the right price and you're patient enough, you will get more than the returns you're getting on the Nigerian treasury bills market. I mean, you cannot compare what the treasury bill market is at 1% or less than 1% to getting 10-15% on the Nigerian Stock Exchange.
Awesome. Yes. Thank you very much, sir. This has been enlightening to say the least. Back to you, Mr. Joe. So we're going to talk about our revenue as a country. So Nigeria is heavily dependent on oil for revenue. Now the government has reduced the budget benchmark to $20 in recent times. Will these prices affect the man on the streets, the regular people, and how and who are the people that will be hit the hardest?
Yes. Initially, the budget benchmark was around $57 to a barrel, and now it's about $20. Definitely, that will have a huge effect on the economy. Basically, production capacity will be affected, agri demand and supply chain will be affected, and the X sector will be affected because the allocation to different sectors will be negatively affected.
Okay.
Different sectors will not enjoy what they should have enjoyed if the oil price was based on $57. So basically, the man on the street will have reduced income. The Nigerian budget is usually more spent on recurrent expenditure. We do not obey, we do not adhere to 70 to 30%. So salary might even be affected. To pay salary might be difficult. Government will have to rely on borrowing and some other measures. So the man on the street will be affected because their income is eroded, and of course they have to be taxed also. So it will be difficult for people to meet up with basic needs in terms of buying goods and services. And beyond that, even the percentage of oil in the GDP is quite small, quite low, about 6% or so of GDP. And we know the level of corruption that goes on in the system. So when we had normal revenue, usually it is the politicians that get much of it. So if it's going to come down now, because they'll be affected, the money will be affected. But those that will be hardly hit are the people on the streets, the lower income cadre to be highly affected.
Okay. So due to the oil prices presently in Nigeria, we are trading in the region of $400 naira to a dollar. Now some analysts say that we might drop to 500 naira to a dollar. What's your take on this?
Yes, like we all know, Nigeria is an oil-dependent nation.
Yes.
And we do not export. At best, we export primary crude oil. And that means that we do not even benefit from the crude oil, because when it is processed, it gives us more revenue. So the exchange rate at about 350, 360, managed to say, we knew that there is no how that is sustainable if we are dependent on oil. Now we have not diversified the economy, and we are now having $400, naira to a dollar.
Yeah.
With that, there are two things. Is either that government devalues, and if government devalues, is it to show up the naira so as to have more naira, or you devalue naira to export? We do not have export base. Our production base is low, and if you are devaluing naira to show up the naira, that is not acceptable. So if care is not taken, and there is the present regime of exchange rate, it might result to about 450, 500, and even more than that.
Okay. The VAT was increased from 5% to 7.5%. Now, after this has been done, what other options does the government have to balance the budget?
Yes, that's a good question. A 7.5% VAT increment. The first thing is, we are not a people or a kind of country that drive policies aggressively. So, be that as it may, what's the expectation in terms of success of 7.5% VAT rate? 80%, 90%. That's an issue. Now that there is COVID-19 around with us, and it's the cost of the $20 benchmark we now have. So the government need to think deeply. What are the other sources of income? For me, my take is not even income, because the best thing we can take off is to borrow from offshore, right? And apart from that, you are talking about local banks at home. And if you do that, there's what we call crowding out effect. Their private sectors are competing for the same fund they're going to be competing with. So my candid opinion is that government should look at how to reduce its expenditure. Look at the sectors and prioritize. If revenue are coming down, definitely you should look at sectors that are very, very challenging. They are not quite, reduce those, especially on those sectors. That's quite good. And that the government can look at is in terms of infrastructure and some other expenditure they have. They can look at how to partner the private sector. Partner with this public-private partnership. That will probably give government that leeway to also depend on the private sector. It's not going to be easy, but it's a whole lot of problem that requires government to we should be disciplined with our budget expenditure now. The first thing is to be disciplined, and the second thing is to ensure that you don't have false hopes. False hope is how much success do you have with a revenue generation drive. Usually we don't get much of it. Right now that it's almost like 50% at $20 benchmark. We're going to have almost 50% revenue cut off. So government need to look at sectors that can reduce expenditure on, look at partnership with and borrow funds also.
Okay. Thank you so much, sir. This has been very enlightening, to say the least. Thank you for joining us this week on Coverfield Weekly. We hope to see you next time. Please like, subscribe, tell your friends about us, and check out our other platforms. Thank you so much. My name is Eli Momo. See you next time.